Hello, ladies and gentlemen, crypto deep divers. Welcome back to Weekly Crypto. Today, I'm going to talk about Bitcoin, and also I will touch on gold and silver as well. And there's an article coming out from Bloomberg saying that the world's wealthiest family are stockpiling cash as recession fears grow. Just in case you're new to the channel, you can earn EOS token based attention token in Coinbase. So let's get into it. And let's talk about Bitcoin quickly. So I have been talking about this Mr. Anderson method using a 10-day and 20-day moving average. So you can see on around September 17, the 10-day moving average crossed below the 20. That means there's a change in trend from the bull trend to the bear momentum. So you can see every single time if the green is the 10 MA, the 10 moving average cross above, you can see there's an upward momentum. When it cross below, then it will be a downside momentum. Right now, it is crossed below. We are in a downward momentum at this time. And so you can go back to my previous video. I talk about that. So you probably anticipate this downward trend. And let's talk about gold. So gold, you can see there's a headline from Money Week magazine back in September, which is a few days ago, September 27, 2019. So say hold gold, insurance in turbulence time. So if there's a big headline like this in the mainstream media, so I think it's a time to not to buy gold. It's time to sell actually. I don't think it's a good time to sell. I think the good time to sell is basically when gold is at around 1550. But right now it's below 1500, right? And when silver was at $19, right now silver is only 17.5 or something like that. I don't think it's a good idea to buy at this time. Not a financial advice. Use your due diligence. The reason why I say that is because if you see, this is as of September 24th for the gold commodity future. So you can see the commercial short position, which is 500,000. And commercial is basically big banks, big institution. Non-commercial, you can see the long position, which is has a lot, 370,000. Short position is only 57,000. So if you go to Vegas, the house always win, right? So basically the banks, the big banks, the institution is the house. If they have short position over 500,000, there's no reason for them to pump the price to liquidate their own position, right? So you can see the long position have so many, they would dump the price to liquidate the long position. So non-commercial, which is an investor or small investor or retail investor. So this is from the gold future market. And as for the silver future market, where's the silver? So the silver market is a similar scenario as well. For the commercial, which is a big bank, big institution, over 140,000, the short position. And for non-commercial, which is a retail investor, you have long position 94,000 and short position is only 43. So there's a reason to dump to liquidate all this position. But this is September 24th. This is a few days ago. I'm not sure if they will, if some of this contract is already liquidated. I'm not sure at this time. And so that's why the price is dropped. So the thing is, if you watch my previous video, probably, let's see, a week ago, I talked about this already. So we anticipate this dump. Gold, silver, dump. See, 1 week ago, I talked about this. And and then it complicated by the attack in the Saudi Arabia. Then the gold spike up again. And then now it go back down again because of the future contract. So so you can see I talked about that in a week ago, and I talked about that again 3 days ago about the price of gold and silver, like Bitcoin, gold, silver, dump. So I talk about multiple times. You shouldn't miss all this if you follow my channel. And let's go back and talk about. So this is pretty interesting. Like when the headline like this, I'm not going to buy gold. I will wait and see. And another interesting part is Rhythm Trader. He's saying that dollar is the currency of the state. Libra is the currency of the corporation. That is absolutely true. It's the corporations. Bitcoin is the currency of the people. Yeah, true. And this is pretty interesting tweet. So this tweet is from May 16, 2011. I wish I had kept my 1,700 Bitcoin at 6 cents. And instead of selling them at 30 cents, now they are at $8. So the same amount of Bitcoin, 1,700 Bitcoin, is now worth about 13 million. So he paid $100 for his Bitcoin and then sold them for 510, and then regretting that he could have instead sell them for over 13,000. So right now it's like 13 million. So I think, you know what, when you buy Bitcoin, just if you have extra money, just buy it and forget about it. That will be all, okay? Just buy it and forget about it, put it in your ledger and forget about it. This is pretty interesting. This is so interesting. And another interesting tweet from Rhythm Trader, he's talking about this thing. So right now, the corporate debt, the corporate bond outstanding is at all-time high since since 2015. And he tweeted about that. It's basically those corporate debt is almost negative interest rate, and yet those pension fund or whatever funds or whatever you contribute to 401k, they'll buy all this crap. And basically, it's a negative interest rate. Basically, I want to borrow $100 from you, and pay you back $99 a year later, which you get less money, right? Instead of getting put your money to grow, you can get 10%, 20%, whatnot. But now you get negative interest rate, and there's over $1 trillion of corporate debt, and that's guaranteed to lose the holders' money. But they're saying that in the mainstream media, they're saying that Bitcoin is the Ponzi scheme. But which one is the Ponzi scheme? Is this one is the Ponzi scheme, or Bitcoin is the Ponzi scheme? That is very interesting. Please comment below. I would love to hear from you. And another thing is those corporate debt. They are not using those corporate debt for research and development. Apple buy back their own stock. So they use all this corporate debt to buy back their own stock, to pump up their own stock price. And if you're the founder or the shareholder of the company, you're going to be benefit because your compensation, for example, the founders or some the high level ranking officer in the institution or in the corporations, their compensation is probably a lot of from the stock compensation, right? So they pump up their own price, then they only benefit those CEO, the founder in the corporations. So basically, they're using this corporate debt to buy back their own stock, to pump up the stock market, to pump up their own stock, and then they get huge amount of bonuses. This is how, unfortunately, this is how a lot of companies, how a lot of corporations are working like this at the moment. So if you borrow all this money to do research and development and to do some next innovation, to come up with a next big thing or next idea, then it's good to the small shareholders because you are going to, so that would be beneficial. But right now, you are not doing all that. You are just pumping your own price, and then at the same time, you benefit from it. And even though there's no growth in the market share for your product and stuff like that. So this is pretty, to me, I think they are just too, I don't know what to say. This is ridiculous, seriously. They're just pumping their own price of the stock. So yet they will say cryptocurrency is the Ponzi scheme, and I don't know which one is the Ponzi scheme. And you can see Home Depot, they buy back their own stock. Apple, they buy back their own stock all the time. They give out dividends, and then they buy back their own stock, so that the stock price, they keep on popping up the stock price. Let me know what you think about this. I would love to hear from you. That is pretty interesting to hear from you. And also, this is pretty interesting too. And this is from Mr. Percent of the world using internet in 1995 is 0.4%. Remember back in those days, I think you used the dial-up, right? Or whatever. There's no high-speed internet. You use dial-up back in the 90s or 80s or whatever. And the email system is crappy. It's like you're using... I don't know, it's very immature at the time in the 90s or in the 80s for the internet. Percent of the world using the internet in 2019 is 58.8%. I'm very surprised. I thought right now is almost 80%. Maybe they account for the third world country. They don't have the infrastructure for the internet, stuff like that. Bitcoin is to money what the internet is to information. percent of the world using Bitcoin in 2019 is 0.4%. If you thought you are late to the Bitcoin, think again. That is very true. When you talk about Bitcoin to a lot of people, they don't even own even one Bitcoin, and they will say this is a Ponzi scheme. It's not backed by anything. When you ask them if the US dollar is backed by anything, they couldn't answer either, right? And Willie Wu tweet about when you hear an economist comment on technology, they don't understand and recall. This is a quote from Paul Krugman. He is a Nobel economist, Nobel Prize winner. And by 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines. So this is based on this is the quote from one of the Nobel Prize winner, professor of economics. And the thing is, to me, a lot of those economists, they have been lose touch to the real world, what's going on, and they have been in the academia world, in their own world for too long. So they don't know what's going on out there. I mean, they are just too narrow focused. So if you listen to them, you're going to miss out the internet age, right? And back in those days, you won't shop online, right? But right now, you shop online all the time. That's changing the way how we do business and how we communicate with one another. But right now, is nobody like sending. I mean, not nobody. I think there's in the mail, people don't mail people stuff. Christmas card or whatever. They send them an email, or they send them an e-card, or they just text them or whatever. Or just use WhatsApp, or using different places to do that. They don't like mail a Christmas card, right? This is like that not that many people compared to in the old days. We send out tons of Christmas cards. And Mr. Anderson tweeting about we must divorce our ego from the trade. It's a psychological game. Most people think that they are playing against the market, but you are really playing against yourself. Listen only to what the market is telling you now and target, and forget what you thought it was telling you 5 minutes ago. And this is very true. The thing is, you got to have a plan before you trade, and also you don't when you put a trade, you don't put your emotion. When there's a dip, you look at the indicator. If they miss all the indicator, you buy, and never chase the high, and don't follow the crowd. I mean, most of the time they are wrong, right? And also, you don't have to make trades very often. If you're a professional trader, you do trading for a living, of course you're going to trade very frequently. But then if you are just regular people who have a day job, I don't think it's a good idea to do trading. And maybe just using a more long-term approach. And I think people trade too much, and the more you trade, the more likely you're going to make mistakes. So a lot of successful trader, they probably may take 5 trades per year, and that's it, right? The thing is, before you trade, you have to calculate the risk and reward ratio, and whether it is worthwhile to put the money into it, and then not just blindly follow whoever in the Telegram channel or the YouTube. You have to look at the chart yourself. You have to determine whether the reward is more than the risk. So, and also the most important thing is to preserve your capital. You don't want to lose all your capital as well. And BTC volatility update. So initially he talked about 1 to 4 more weekly close before we get to the party, like a rock star. Now it will take 5 weeks. Yeah. But then he's saying that the good news is the volatility is back. A trader has no greater friend than volatility. Volatility will be the norm and the not exception for quite some time. Yeah, this is true, because we have been so consolidating for so many months right now. We don't have that many volatility compared to 2017. We have huge volatility in the market. So this is pretty interesting. Another thing I want to talk about, the inverted yield curve quickly. So the inverted yield curve, almost forgot. And the world's wealthiest families are stockpiling cash as recession fears grow. The thing is, this is from mainstream media, and they make such a big headline like this. And I don't know what their motives, is that they want to create fear to the average Joe to buy commodities. I mean, I don't know what's their motives. I mean, if if they really stockpiling cash, I mean, if they stockpiling cash, they won't tell you, right? Isn't it? They won't tell you. They will just do it quietly, and then they will just collapse the market or something like that. I don't know. I am just a little bit questioning about why they post something like that in a big headline in Bloomberg. So I don't know what's their motives behind. I'm skeptical on why they posting stuff like that. Is that they want to create fear? What do they trying to do? Because if the wealthiest family, they're stockpiling cash, they won't tell you. They will why it's in the headline. So I mean, they were secretly doing it. I know there may be some research firm maybe saying stuff like that. I don't know. I'm just a little bit skeptical what they are telling me, what they're telling us. Let me know what you think about this. I would love to hear from you. What do you think about this? I'll post the article below if you're interested to read, but to me, there's nothing much in there. And another thing about the inverted yield curve, and back in December 2005, the curve was inverted in 2005. You can see negative 0.02. So before the curve is inverted, it will be pretty flat. You can see the gap is pretty narrow. You can see like 0.4, 0.26, 0.18, 0.16, and then 0.07 on November 2005. And then, of course, in December 2005, it become negative 0.02, which is the negative yield curve, when the short-term interest rate is basically lower than the higher than the 10-year than the when the short-term interest rate is lower than the long-term long-term interest rate. Yeah, that's right. So when the 2-year interest rate, the 2-year treasury, the interest rate is lower than the 10-year treasury. So that is a negative yield curve. And right now we're pretty much very flat. Right now it's like 0.06. I'm not sure for 10-year and 2-year 2-year treasury. So eventually this will be inverted. So even though it is inverted from the last recession cycle, it takes about maybe 6 to 24 months before the next recession. So if you based on the stock market, let's go back. So based on the stock market, so you can see, remember the 2005, the curve was inverted at 0.02 or something, negative 0.02, December 2005. And even though it is inverted in 2005, the stock market is still going up, going up, going up until November 2007, which is at the peak, November 2007. And then after that, it goes downhill and finally bottom out in around March 2009 for the S&P. And that's even though the curve is inverted, it will take probably 6 to 24 months before we finally came to another recession. So right now the curve is pretty fat. So we'll probably anticipate the next recession cycle probably coming up in 24 months. Yeah, 6 to 24 months. So just be prepared what's going on out there and just tune out all the noise. Just be very skeptical what the mainstream media is talk about, and just be very careful out there, because whatever the mainstream media tell you maybe the opposite is true. And let me know what you think about this inverted yield curve. Do you think this is an indicator that can tell you the next recession? But based on historical data, every single time the curve is inverted, never miss. They predict correctly for the next recession. So every time it is inverted, this is a dot-com bubble, I believe. And this is I think the oil crisis, back in the, and then the hyperinflation during that time. So let me know what you think about that. I would love to hear from you. If you found this video helpful, smash the like button, subscribe to my channel, also share with your friends. Make sure you subscribe so you don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. Hey, please comment below. I would love to hear from you. That will also help my ranking. If you find this video helpful, smash the like as well. And I will continue to provide quality video for you guys. You can also follow me on Twitter as well. Remember, crypto deep divers, we the people take control of our money. Stay wise, stay safe. Peace. I'm not a financial advisor. Investing in cryptocurrency and commodities have inherent risks. Please use your due diligence.